Okay, let's just jump right into this explainer because we have to talk about what is hands down the most baffling corporate headline of the year. If you follow tech or aerospace, you probably had to read this one twice. An aerospace conglomerate dropping a massive bag on an AI software company. I mean, rockets and an automated coding app. It feels like a tractor company buying a video game studio. Just completely out of left field, right? But as we'll see today, this isn't random. It's a calculated masterstroke. We're going to unpack the strategic genius, the frankly unprecedented financial engineering, and the massive industry fallout behind this whole shebang.
$60 billion. That massive figure is exactly what SpaceX is putting on the table to acquire Anisphere. And if you aren't familiar with Anisphere, they're the startup, founded by a bunch of brilliant MIT dropouts, by the way, that built the incredibly popular AI coding assistant Cursor. $60 billion. To put that into perspective, that is way more than Elon Musk paid for Twitter, all for a venture-backed software startup. It's just a jaw-dropping number that literally shifted tech valuation expectations overnight.
So naturally, we're all staring at the same fundamental question here. Why on earth did a rocket company just buy a coding app? It really does seem like a bizarre pairing. On one side, you have SpaceX, laser-focused on physical engineering, getting satellites into orbit, pushing for interplanetary travel. And suddenly, they're swallowing up a team dedicated exclusively to software engineering. Well, the reality is, it's not just about rockets anymore. It's about data, infrastructure, and a brutal arms race for artificial intelligence supremacy. And to really grasp why SpaceX pulled the trigger on a $60 billion deal, we have to look at exactly what they just bought.
So let's talk about the prize here. Cursor. This tool is fundamentally changing how software is built. Forget typing out manual, complex lines of code. With Cursor, developers can literally just type conversational instructions. You just tell the assistant what you want to build, and it writes, edits, and maintains the code for you. And we're not talking about some niche experimental tool here. It's already being used by millions of expert software engineers, and over half of the Fortune 500 companies rely on it. So by snagging Cursor, SpaceX is instantly buying direct distribution rights into the absolute most premium enterprise market in the entire tech world. But here is the real internal driving force behind the deal. SpaceX's AI division, xAI, has hit a wall. Their flagship chatbot, Grok, has been lagging pretty severely behind competitors like OpenAI's Codex and Anthropic's Claude Code when it comes to automated coding quality. It was becoming a very public issue. So the goal here is crystal clear. SpaceX wants complete software autonomy. They are totally done relying on third-party software models and want to transition entirely to an elite in-house programming platform. Buying Cursor is the aggressive, immediate fix to bridge that tech gap.
And the sheer speed and ruthlessness of this execution, it's staggering. Okay, so before the deal, SpaceX had an option contract. Basically, buy Cursor on for $60 billion or walk away and pay a $10 billion fee. Then, day zero hits. SpaceX has its historic stock market debut, right? They raise $85 billion. Over the very next 3 days, corporate leadership is actively tracking a drop in Grok's user engagement. They don't wait around. Just 4 days after their IPO, boom, they activate the full buyout option. Official SEC documents are already filed, aiming to close this merger by the third quarter of 2026. Now, looking at how this corporate integration actually works financially, you might be wondering how even a giant like SpaceX just scrounges up $60 billion in cash. Well, spoiler alert, they aren't. SpaceX is completely bypassing their cash reserves in favor of an all-stock transaction. They've set up the subsidiary called X67 Inc. to merge directly with Anisphere. The mechanics are brilliantly simple. Every single share of Anisphere stock just converts into SpaceX Class A stock, based on a 7-day average trading price before closing. So Cursor becomes a wholly owned corporate subsidiary, and SpaceX doesn't drain a single dollar from its bank accounts.
And that right there illustrates why this deal is absolute financial magic for SpaceX. Because of their recent public listing, SpaceX's corporate valuation catapulted to over $2 trillion, which means their stock is incredibly valuable currency. They get to absorb this massive $60 billion asset while diluting existing shareholder equity by a mere 3.4%. They are literally using their newly minted trillion-dollar market cap to swallow up premium AI assets for what essentially amounts to pocket change in equity.
But look, buying the software is only half the battle. You still have to train it, and that takes us to Memphis, Tennessee, to the Colossus Supercomputer Complex. This facility packs the immense processing power of 1 million H100 graphics processing units. 1 million. By plugging Cursor directly into Colossus, SpaceX is just completely removing the hardware limits that normally restrict software training. It's a level of compute scale that standalone AI startups can honestly only dream of. So the crucial takeaway here is that SpaceX is now treating its compute power like literal rocket fuel. Before this acquisition, SpaceX was renting out spare data center capacity to external tech companies. Not anymore. To feed Cursor's massive training needs, SpaceX is ruthlessly triggering 90-day cancellation clauses on their external cloud computing clients. Imagine renting an apartment and your landlord kicks you out because they need the space to build a super intelligent brain. That's exactly what's happening. All that massive processing power from Colossus is being diverted straight away from cloud rentals and handed directly to the internal Cursor dev teams. What they're building with all that compute fuel is a brand new, closed-loop ecosystem. Step 1. They use Cursor's massive user base to gather vast amounts of specialized programming data. Then, Step 2. They take all of that highly specialized data and feed it directly into xAI's foundational models. Finally, Step 3. They merge that incredible user interface of Cursor with the raw intelligence of xAI to launch unified products. And we're actually already seeing this branded as Grok Build. It's just a perfect synergy of data collection, model training, and product deployment. As you can imagine, this move sends a massive shockwave across the entire tech industry. And depending on where you're sitting, it's either a massive win or a pretty devastating loss. If you're a software developer or running a tech enterprise, you're a big winner here. You gain access to faster, automated tools like Grok builds that you can deploy right in-house. Venture capital firms, we're talking Thrive, Andreessen Horowitz, NVIDIA, Google, they are also taking home a huge win with this record-setting exit. But then, consider the cloud customers. They are the undeniable losers today. They're facing sudden 90-day contract terminations, losing all their computing space, and basically being left entirely out in the cold. Now, we have to note, this isn't a guaranteed slam dunk. There are some severe roadblocks ahead. First up is integration friction. Just take a second and imagine the culture clash between highly rigid, structured aerospace engineers and a nimble team of Gen Z AI coders. That is a lot to manage. Second, Cursor has historically relied on foundational models from their direct competitors to actually function. Trying to switch the engine entirely over to xAI systems while the car is driving down the highway, that's a massive technical hurdle. And finally, since this is an all-stock deal, any valuation volatility or sudden drops in SpaceX's share price will drastically change the final deal value for the sellers. On top of all that, Cursor isn't operating in a vacuum. They are in a fiercely competitive, frankly ruthless environment. Actually, they are currently bleeding market share. They recently saw a severe drop from 41% down to roughly 26%. Why? Well, because developers can easily switch platforms. Competitors like OpenAI and Anthropic are aggressively fighting for those exact same enterprise software clients, which makes user retention an absolute uphill battle for this newly integrated team. And hanging over this entire historic transaction is one massive looming threat: regulators. They are looking incredibly closely at this deal. When you have an aerospace giant locking up a premier software asset and monopolizing immense supercomputing power, antitrust concerns are definitely going to flare up. And if government officials step in and block this merger over monopoly concerns, SpaceX doesn't just get to walk away. They are on the hook to pay a staggering $4 billion penalty. The stakes literally could not be higher. Which brings us to the ultimate realization of this explainer. We're watching traditional industrial firms forge a path to reinvent themselves, taking their physical infrastructure and using it to totally dominate the digital realm. And it leaves us with one massive question to chew on. Armed with a $1 trillion valuation, millions of GPUs, and the world's premier coding software under its belt, is SpaceX still an aerospace company? Or are we watching the birth of a pure artificial intelligence empire? Thank you for exploring this with me today, and definitely keep your eyes on how this wild integration unfolds.